Hello everyone. In the next few minutes, I am going to take you through some of the key events of the recent past and Kotak Mutual Fund's view on equity market. After a decline of about 5% in February, Indian equities fell further in March, albeit at a slower pace than in the previous month. However, the broader market fared much worse than the large cap basket as measured in terms of Nifty index. Macro and political uncertainty remains high, and earnings concerns have also increased of late following recent negative events in global trade and political landscape, and also due to continuing concerns in Indian banking system. Firstly, with a series of steps announced by US, the concerns on an international trade war have risen, especially vis-a-vis the US. We believe even in an adverse scenario, the direct impact on India will be limited, as India's trade surplus with the US is only about 1% of India's GDP, and at the gross level, India's exports to the US is only $77 billion, or equivalent to about 3% of India's GDP. It is too early to predict whether the recent actions by US will lead to escalated levels of trade war globally or not. We need to watch out for actions and responses from other economies in the world over the next few months on this front. Secondly, the surprising defeat of BJP in the recent Lok Sabha by-elections and the TDP's announcement to pull out of the ruling NDA coalition have also increased speculation about the nature of pre-poll alliances for the 2019 general elections and the nature of government policies over the next 12 months. Currently, as we head into new financial year, Indian market appears to be at crossroads. On one hand, India's micro is in better shape today than it was a year ago, while on the other side, macro environment now appears to be more challenging along with uncertainty resulting from political developments. News flow on the banking sector also continues to remain negative. However, there seems to be visible recovery in corporate fundamentals as seen in the quarterly results trend. The borrowing calendar recently announced by the government has also calmed the nerves in the fixed income market, leading to sharply lower yields, thus reducing risk of higher interest burden on corporate India in the short term. The market is likely to be driven by earnings season and monsoon expectations in the short term, and will largely be dependent on politics in the second half of financial year 2019. While in the past few weeks, mid and small cap stocks have corrected more than the large cap stocks, the premium valuations of mid and small cap segments still continue on a relative basis. Therefore, we continue to prefer large cap stocks over mid and small cap segment. We also advise equity investors to make disciplined and regular investments with long-term focus and not to chase momentum in the market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.